I'm really happy to be here this afternoon, and thankfully joined by some friends and co-founders of Save Canadian Mining. On my immediate left, as I look at the screen, is Alistair McIntyre from Altiplano Metals and the Metals Group. And Alistair, welcome aboard. Good to have you.
Yeah, thanks, Terry.
Top left, Alex Black from Rio 2, all the way from Lima to your living room. Good to see Alex.
Thanks for the invite.
And right above me, as he often is Wayne Tisdale from Canadian Palladium. Hey, Wayne, how are you doing?
Good. Thank you.
Good.
Yeah.
Good. Well, listen, we wanted to introduce, obviously the audience to, some of the cause, what we're doing. We're also going to learn more about your companies and what's exciting in your world. We're going to talk about, how the cause we're fighting for affects your particular company and the results you've had to fight through. And then we'll have a little bit of a fun section. We'll take some questions from the audience, and we'll find out what you guys are investing in these days, because who better to talk to than the guys that are in the field and living it. So that'll be sort of the agenda, and then we'll wrap it up with a recommendation on some things that folks can do if they like what we're doing, and we'll go from there. So Jane, if you could flip up that one chart, I think that would be really good for the audience to see. So this chart, if you look at it, basically we hired a company called Murenbiel Research, and they're very notable research specialists, particularly in the gold field, but they're really very detailed PhDs and these types of things. So we said, guys, look, we think there's something wrong in the market structurally since the tick test was taken out. Now, for people that are just reinvest, what is the tick test? Well, the tick test, up until 2012, for 142 years in Canada and around the world, really, if you wanted to sell a stock, you had to wait for the stock to go up, tick up, and that was the tick test. If the stock didn't tick up, you couldn't short it. But in 2012, generally speaking, to allow algorithmic trading, they got rid of the tick test. And so after that, you could sell the stock short, going up, going down, going sideways, it didn't matter. So the chart you see in front of you there is sort of a look at the markets before the tick test was removed and then after. And I think what you'll notice if you look at the aftermarket is that before, and the reason why we can't go any further back is that sort of as long as the data could go, and we're a volunteer organization, we couldn't manufacture the data for another 50 years. It just isn't out there in Canada. So this is what we're able to pull together. But you can see before this tick test was removed, generally speaking, the stock index for mining stocks, base metals and precious metals, done the combinations they are and the real life, were basically above the stock, above the commodity index, and sort of at or above. So what you see as you look at time now is that today, and this was, I guess, sort of early January, you're down by where the stock indexes are down by 65%, whereas the commodity index was down since the tick test change only 7%. So we're almost off by, stocks would have to triple to get back to normal. So think about that for a second if you're an investor out there. And obviously we're all mining investors. We all own our stocks, and we own lots of other mining stocks. So everyone's lost a boatload of money here, and that's the real thing. And then of course, by losing this money, we obviously spend less. We have less capital as companies to invest, to create wealth and to create jobs. So it has a serious multiplier effect in the economy. And so this is the point we're trying to drive home to government, is that small changes to regulatory environments can have big changes to our economy, and this is why we got to get back to making a change. But this was all this is made possible by getting people together of like mind, like my three friends here, and I wanted to just ask them what prompted them to support Save Canadian Mining, and maybe we'll start with you, Alex. What are your thoughts, and why did you get on board?
Well, about a year ago, we noticed that there was some strange patterns of trading in our stock, and it was very difficult for us to get any momentum on the stock, even though we were doing positive things. as a junior developer. And so we talked to a lot of people, obviously yourself and a few others. And I'm a mining engineer, so it was a big learning curve for me to understand what the hell was going on. But since about 8 months ago, we've been closely analysing our stock with the help of Share Intel and also with buyins.net, who are helping us look at our stock. And definitely we found, not necessarily related to the tick test, but in our case, the presence of counterfeit shares. Right now, that's another ball game altogether, and we're talking about naked shorting. And so we've uncovered that. We still have the problem. We continue to monitor it, and we send letters to the various banks that are facilitating the trades where the various imbalances have been discovered. And I can tell you this, that one of the things I see as being a challenge in our case is the cross-listing of our stock. So we're on the TSXV and we're also on the OTCQX. And what we've discovered over this time of analysis is that most of this shorting is happening in the US. In fact, the imbalances don't seem to appear in Canada, but there are significant imbalances in the US. So that's why I'm here, and obviously supportive of what you're doing, Terry. But we have a multiplier on the impact of this shorting that goes on. And what I've learned is that, as we probably all know and investors know, is this is not just isolated to the junior resource sector. It's all across various industries and sectors. And there are people and also computers or robots, whatever you want to call them, bots, that are out there that are doing this. And the only way to really stop this is to try and attack the facilitator of the trade, which is the bank, right? The banks are ignoring this. And what we have to try and do is make them take this into consideration and do something to block these trades that are coming from these malign groups and people and machines. Yeah. So that's probably all I want to say at this stage.
Okay.
I mean, the other guys can say things, but that's why I'm here.
Wayne, how about you?
Well, I thought it was a personal attack on me. So that's when I met you, I felt very relieved that it wasn't just me, it was industry wide. And as I got into it more, I realized that how dangerous what was. When you sign on as a president of a mining company, you don't realize you're on the TSX or the CSE. You don't realize you're having 14 other exchanges that you can trade you with no control at all. So you have all these hidden markets, black pools, and you don't know where the stock's coming from. It's not a good system, and the bots just play hell with you. And what it really does is it drops your price. It scares the public, your retail shareholder. So because it keeps going down, and it's not you that's doing. You've got good news, and what their job is to scare him to sell so they can get their cover back. And they do it every day. And it's just I play with them every day. And it's frustrating. I had a really good friend that's got a wonderful deal, and he thought there was a conspiracy theory, some people out there against him. And after a couple bottles of wine, he came to discover it wasn't. It was just industry wide, and not many people recognize that. I think one of the things we could do is really the 2D settlement would be very, very helpful if that was totally honored.
I agree. I think settlement's a big issue. Maybe we'll talk about that.
Because they don't have to settle. So that's
that's how you get to the counterfeit stuff as well.
That's right.
Alistair, what about your thoughts?
Yeah, well, I mean, the guys, Alex and Wayne, have touched upon a lot of the issues that we see. I mean, the junior side of the market here, it doesn't necessarily have the greatest liquidity, and sometimes in many cases it can be a bit fragile. And we as leaders of our companies, spend a lot of time in the market. We promote our stock, if that's the right word to use these days. But we're out there. We want to get our good news or get our story out there. We're raising capital, and it's frustrating when you do all that work, and then basically you get times when you have perhaps not a lot of news flow. There's not much liquidity in the market, and it's an easy opportunity for somebody to come in and prey on your share. So, as Alex said, we have times on the OTC, or you see market activity as near the end of the day. Despite you might have some good news that there's someone's going to take that bid and close at a lower level on a weekend, for Monday. So, from my perspective, I've had a trading background, mostly in sort of precious and base metal side, and we saw a lot of this activity in terms of the shorting market. Shorting market's an efficient way in many ways to generate price discovery. But the real challenge here is, where is price discovery with the juniors? Because there's not the same liquidity that you see in the big board, or perhaps even with the sort of broader markets that are out there. Can I
counter on that, Alistair? Because I know what you're talking about, illiquid stocks and junior stocks. But look at us. We've got about 190 million shares on issue. About 50% of those shares are in long-term holders' hands. So let's say we've got 100 million shares out there. For a junior company, we trade on average about 700,000 shares a day on the venture exchange, and we trade about 250 to 300,000 shares a day in the US. Now, a lot of those trades, a lot of the sales that you see are ITG, which is a high frequency trader out of Florida, and also anonymous. I mean, obviously people can trade and not disclose who they're trading through. But all I'm saying, the reason I'm saying this is it does work against a highly liquid stock like ourselves. And if you look at our trading, particularly over the last little while where we've gone sideways, hundreds of thousands of shares a day, but it just gets pushed. We start off high in the day, and then right at the end of the day, you can predict that we're going to close at the same price or a little less than the open. It's really interesting, and so it does happen to liquid stocks as well.
Well, I would absolutely agree with that, because without liquidity in the market, you still can't sell, and you still have to have the other side of it. So I agree on both ends, and the point I was going to lead into is with respect to the high frequency trading. That's where you get a lot of mystery in the market, and you don't see a lot of price discovery. And I think personally, there's a lot of accommodations that were made, to the high frequency trading and on the algo side, without consideration to how it has an impact in a market, whether it's liquid or illiquid. But from that perspective, those guys are looking at this a little bit more differently in terms of traditional investors who are coming into the market and say, I like that stock, right? I'm going to buy that stock. Yeah. I'm going to hold on to it. They look at it from the perspective of, okay, where's the thinness? Where's my ability to move a market and cover my position? And I think the regulators have kind of lost it on that. And some of the work that we did previously, I was working with the Hong Kong Stock Exchange, who acquired the London Metal Exchange, and that was in 2012. And there was a lot of issues around the liquidity of metal pricing, and at that time was when they had algorithms coming in, and they had a very difficult time with the ability to keep liquidity in metals prices, but they resolved it through regulators. And I think we're in the same situation that, from the algo side, I think that's where you've got your biggest concern. Now, sure, you've got guys who've got margin positions and borrowing shares and going short, but I think in terms of how we address this market, I think we should be spending a bit of time to figure this out.
Yeah, I think you're right. When I was talking with IROC, I said obviously we started on the tick test, and we think that's still a fundamental part of it, because generally, it's an important part of capital formation, and in fact, stock markets exist to provide capital, in a democratic way to companies to grow in a different way, in a more aggressive way. and that was all part of it. The algorithmic trading, that the promise was enhanced liquidity, reduced transaction costs, all that stuff. Well, that hasn't really worked out. It's really worked out great for the algo places, but not so good for the pension funds or the individual investors. I would say that's been our observation. If you're an exchange or a bank, these guys are a ton of your transaction volume, and so people are listening to their customers, but they've lost the plot, I think, somewhat, and that it's about creating real companies and real capitalism, and moving on. So while we focused on the tick test, I think Wayne hit upon earlier a point about the T+2 + 10. The transaction closing, and that would get to what Alex's issue is, which is the counterfeit shares. Is that what we have people that buy stock, and investors, and yet the stock never gets up into their account. They actually don't get it. Like if you actually went in and say, well, I want to pick up my 1,000 shares of Rio 2, can I see it? No, it hasn't settled yet. It's 30 days later, it still hasn't settled. I mean, how is that possible? But it's possible because they're not enforcing the laws of the land, which basically says if the thing isn't there in T+2 + 10, they buy the guy in, and that would stop a lot of this nonsense, And we made that point in our submission to the Ontario Securities Commission task force, which is the Ford government put in place to sort of come up with some more suggestions to make Ontario a more competitive capital markets environment. So we're hoping that they'll start to listen to some of these things, because I think it's really critical just to honestly save capitalism. That's that important.
And Terry, you made a good point when we were having our chat before we came into the public room, that there's a lot of activity, nefarious activity, of course, on the short side, with respect to the algos or the markets that are out there, and some of the activity is coming on, particularly near the close. And as issuers here, if we were doing similar activities to either bring our share price up or protect our positions, of course, that we'd be offside. So yep. It's funny, the issues aren't being considered in this. It's allowing those to do what they need to do to kind of make money, and not taking into consideration the investor's best or the issuer's best interest.
You never get calls from the regulators when your stock goes down by 20%, but your stock goes up by 20%. You have got a press release out there like, "Hey, what's going on?"
I was just going to say that. Because there was somebody today that had to that came out with a release saying, we can't explain why our stock is up. I think it was Cabral Gold or something in Brazil, and but nobody asks you when your stock's down 10%.
Well, it might be a good segue, guys, because one of the promise I made to the audience out there today is would actually get to learn a little bit more about the people behind the scene in Save Canadian Mining. And so why don't we start with you, Alistair, and why don't you tell us a little bit about Altiplano and what's exciting to look forward to this year, and why do you like your company right now?
Yeah, well, thanks, Terry. Altiplano Metals, we're focused on Chile. I guess we have a little bit of common there. But we've been actively developing some projects. Our main project is Ferion, which is an underground IOCG, iron oxide copper gold. And we picked this asset up over the past couple of years and have focused on grade and cost control. Small asset. But what our company focus is to develop near-term production projects and cash producing assets, and develop a portfolio of cash flowing properties, rather than from the general kind of junior mining perspective of raising money, drilling some holes, getting some assay results, getting it out, your news out, your stock price up. We see good opportunity in that small mining development aspect of Chile, and put a portfolio of projects together, focus on copper and gold and possibly silver. And as a result, in the last few months, the pandemic created some issues, also created some opportunity. And one of those, of course, has been that sort of rising metal price, and refocus on even mining equity from that perspective. So there's a pretty good deal flow in the summer. So we picked up a mill and a flotation plant to support our Farion project. We picked up a gold copper asset north of our site by 100 kilometers or so. Again, near term past producer, some good grades, 6.8 grams gold, over percent copper. So these are the kind of projects that we like. And we've also spent a bit of time developing and going back underground on a project called Rosario, which is very close to our Farion project by 600 meters, and got some good assay results of that project too. So our focus is sort of near term cash flowing opportunities, and we'll develop a portfolio, and the market of course likes gold, they like copper, and so we want to focus on these areas.
In fact, Jane, why don't you put up the charts of the four companies here? I had them pull this together, and then so that's our stock prices today, sort of year to date for the four companies on the call: Rio 2, Canadian Palladium, Altiplano, and Chile Metals, and then show the increase since the year. So that they're up pretty substantially. The TSXV is up like 22%, and you can see I guess somewhere between 70 to 200%. So I mean, you'd be a pretty happy investor as you got into these a little bit earlier. And I think what's interesting, my observation, what I say to people is that we're in such an early stage of this mining recovery that you're going to see these types of returns, which are mind-boggling. But there's still a long way to go, which is still very much early days. At least that's my thought. Wayne, what are you thinking?
Well, I think it is early days. It's lots of fun. Capital seems to be available for various projects. We at Canadian Palladium have a project in just outside of Sudbury in Massey. There was 500,000 ounces in a palladium play, and we're drilling it off at the moment, getting great results. And so our job is to drill it off to about 1.5 million ounces, and then we're going to sell it in situ, because I believe I'm not a miner like these other wonderful men. I believe I could sell it and move on. Is what I've done. I did that with a company called US Cobalt. I sold it to a friend of yours in Peru, and through a company out of Australia. So I think we have got a good project, and of course we battle this daily, and our stock price should be a lot higher. However, we keep getting diluted because our shareholders go away because it doesn't go in the right direction all the time. So we have to take cheaper financing. So that's why you see the capitalization so large and low prices. So it's a difficult market to do that in. However, the results we have are very good, and we're very excited about what the future is. So we have a good year.
Wayne, and now Alex, over to you and Rio 2. What's the latest on Phoenix?
Rio 2 is a gold development company. Builders. We have the Phoenix Gold Project in Chile, which is in the Maricunga Gold Belt, a belt within Chile that contains a number of projects. I guess the most notable is Norte Abierto, which is a joint venture between Barrick and Newmont, which is about 100 kilometers to the south of us. Phoenix is 5 million ounces of M&I, open pittable, heap leachable. It's the largest undeveloped gold heap leach project in the Americas right now. And we have filed our EIA back in April of this year, and we'll be getting set to start pre-construction activities in April of next year, and leading up to full construction in about September of next year, so 12 months from now. Phoenix will produce a rate of about 100,000 ounces a year, currently for at least 16 years if we go at the same run rate. That's about a 20,000 tonne a day movement of ore pad. However, we think we can expand that to about 100,000 tonnes a day. We'll be producing somewhere between 250 and 300,000 ounces a year. The key ingredient for that to happen is water, and we're working on water for the future of the project. We have the water source for the starter of the project, but we'd like to put in place something for the larger size project. So we're on a trajectory to build a mining company. Rio 2 was born from Rio Alto, where we built 2 gold mines here in Peru, La Reina and Shahuindo, which are now owned by Pan American Silver. who I think are going to change their name to Pan American Gold pretty soon. But anyway, that's a joke. That's the Rio 2 story.
That's a great story for sure. The I think it's funny, and as I was chatting with some of the other, there's so many great co-founders we could have had on this call. The overwhelming determination, I guess, is the word I feel most I associate with the junior mining CEOs. I mean, we've had our heads smashed in pretty badly over this last number of years, but if you stuck with it, I think now is the time. The commodity markets are turning, generally speaking, because of the helicopter money approach of the governments all around the world. And, there's just not going to be a safe place to be if you're just in cash. I mean, I think it's going to be taxed away. It's going to be eaten away by inflation. And, pricing you're seeing is already starting to rise. Obviously, gold's made a surge forward. Copper's above $3 now. So it's like that backdrop, even with the shorts, is going to make for a compelling mining market for our juniors. And if we could get these rules changed and just take the shackles off, we could have an epic bounce here, and really reward our shareholders, and then have capital to plow back into our communities and into growing our companies. So I think it's exciting times to be in the space, and exciting to just talk to people like yourselves. All you guys have done it before. This is not your first rodeo. It's not your first company, and that's probably the most important thing for people selecting stocks out there, is to find people that have done this stuff before, because they if you know what you're doing, it's it's not easy, but experience certainly is a helpful guide. So I commend all you guys for all your hard work and moving your companies forward in these challenging times. As we move further forward in the agenda, I think one of the things I wanted to talk about was, in particular, if, as we take this, to the government and press them to make changes, I wanted to say, what would be the one change, Alex, that you'd like to see right now, that in terms of the regulatory environment? What's your big get that we should try and get for you?
Not making the change that you want to make, but getting the attention of bodies such as OSC and the various securities commissions that we have in Canada are the key, because they've got to play into it as well. I mean, what I've been seeing to a greater extent, and all the research I've done, is them turning a blind eye to most of this. And your challenge in campaigning for this is to try and get them to recognise this as a problem, and to put in rules that make sense to cover up. So I think that's the biggest challenge, is getting the buy-in from the commissions that oversee this.
Yeah.
And that is our phenomenon is greatly in the US, but the SEC have definitely turned a blind eye to this stuff. And so, that's the problem. That's the problem.
Yeah. How about you, Wayne? What are your thoughts?
That's what they got to do, right?
Well, I think you're doing it. We're moving forward. We're getting a lot more attention. I think one of the things I'm going to try to do in this is get more mining companies involved and more people to understand it. I would say probably 70% of the presidents of the mining companies on both the TSX and the CSE don't realize what's going on, and so it's the education process to them, and it's becoming quite aware. And I think we're getting a lot of support. And I agree that with Alex, you got to go back to the governments and the agencies and push on them. And you're doing a great job. So thank you.
Yeah. Alistair, what are your thoughts?
Yeah, well, I share the sentiment of the other guys. I mean, this is down to the regulators. And of course, they like to set the rules. They don't like to be told that the rules may need to be changed, because, I think what we're seeing here is that there is a pattern that, in this particular environment, and with respect to our, call it mid cap or micro cap or small cap, however you want to classify it, it's relative to other sectors in the industry as well. They're suffering because of it. And then I think the regulators have to understand that as issuers, they should also be looking at how we are protected. It is important, of course, for the investors to have a very opaque and primarily transparent regulatory body to be able to operate in, and that's very important from the regulator's perspective. But when there is a scenario where there's a gap and people are able to take advantage of that, and even use the words arbitrage it, that there's definitely a problem, and they need to address it.
Yeah, I agree. Well, listen, it might be a good time to slip out to the audience, and I see there's some questions out there. So Steve Sims asks, what was the rationale to remove the tick test? Well, that's the scary part. It really wasn't. It wasn't like they purposely, tactically said, "Hey, let's kill the tick test because it's not doing its job." It was an inadvertent casualty of basically. My understanding was they were determined to bring algorithmic trading in. I don't know whether algorithmic trading first started in London or New York or Hong Kong, but it started in one of those spots, and then every other jurisdiction had to match. So I don't know. In my mind, that's probably the biggest mistake that the capital markets made, because that the promise of algorithmic trading has never really materialized in my mind. It's certainly, hey, if you're into multi-billion-dollar stocks, maybe $5 billion and up or something like that, maybe it makes sense there for some liquidity reasons. But for capital formation needs, for I'm talking right up to a couple billion in market cap, it's destructive. I will not believe that it's a product thing, and so it was bought in. It doesn't enhance shareholder value. It doesn't create value for companies, and it's but that was the tick test. Just back to Steve's question, what was the rationale? It was an inadvertent rule change. They basically said we didn't have the trade-off, as I was told, was that in order to allow the exchange TSX to have algorithmic trading, the OSC said, well, you got to be competitive. You got to have competitive exchanges then. And so they said, fine. So that's why we now have 14 exchanges, which is another big problem. And then of course, how do you tell what was the last tick? Because you're on they're trading Altiplano metals or Canadian palladium on 14 different. So what was the last trade? The technology didn't exist for a consolidated tape, or they didn't seek to put it in. I'm sure they could have organized it, but they didn't. And as a result, they said, oh, we don't need it. So they had some, as I recall, some study that was done on the Russell that said shorting stocks was not a problem, and so they got rid of it. And of course, if you compare the Russell to the microcap mining market, is the height of ridiculousness. I mean, it's it's bizarre, but that's the theory. So that's why that happened.
So we're basically collateral damage on this whole.
We're collateral damage, and that's when I go in and I talk to the regulators, and I don't really, honestly, the regulators take instructions from governments. Okay, they don't like it, but that's what they got to do.
I mean, from the banks.
Yeah, and so I'm not really negotiating with the regulators, because they're not gonna ever decide in our favor. Forget that. It's not that they're against us. It's just that they don't like changing rules. So you're going to have to get the government on side. The government has got to be concerned with individual investors and creating jobs. And I believe that they are, and I believe especially that the Ford government is, because it's a small conservative government. They want to create jobs, and they want to get people back to work. So this is our pressure point. We got to get government on side to say to the OSC, we want this change. The OSC then will instruct IROC to make the change, because it's not like the way we looked at it, because we were a small organization when we first started. It was just me, and then Eric came involved, and then you guys. It was like, we can't lobby everyone. And the point of the matter is, if you can't get Ontario on side, then you're doomed, And Ontario, if we can't get a conservative government in Ontario to support this, which is pro-business, pro-jobs, pro-development, what are you going to do? You got to start there. So if we get there, do I think Alberta and Quebec and BC will come along? Absolutely, because it's going to create jobs there too. So
I think it's also an important distinction, although maybe perhaps some of our assets are out of Canada or companies appear to be out of Canada. The important thing here is that we are all raising money in Canada. So we are basically the people who are basically investing in our companies and trading our shares on Canadian exchanges at TSX are Canadian investors. So it's important for them as well, not just us as issuers, but those who are investing in our company basically want the confidence that they have liquidity, that they can get a fair price, and they have a fair shot of seeing the markets move in their favor.
Fair enough. Barry Bradford has a good question. He asked, what is a counterfeit share? Barry, I'm going to turn you over to Alex, because Alex is going to be able to explain this very well, because I know he knows it cool. Alex?
Well, simply, once again, I'm a mining engineer, but simply what happens is it's just like shorting a stock, right? So when you short a stock, you borrow shares. And this is something very important. If people have shares, they should instruct their broker not to allow those shares to be lent out. Right?
Totally.
Yeah. Very important.
1,000%.
So everybody that's listening to this presentation, ring your broker and tell him not to lend your shares out. That's the point. Yeah. So you borrow shares, and then you've got a period of time the period of time, the 10 days, et cetera, that Terry was talking about a minute ago. You've got to then find the shares and return the shares, right? Now, what happens on naked shorting is that are fabricated and they're bought and sold. I mean, that's what it is. And as Terry said, you could be involved in buying and share, and then you turn around to your broker and say, now, have you received the certificate for that group of shares? And he may not be able to get it for you for a long, even ever. It's crazy. That's. Terry, would you?
Yeah, no, I agree 1,000%. And I guess the scary part about counterfeit shares is that it gets into, when you get into proxy battles and the like, all of a sudden you've got really, in many cases, we've seen, there's 130% of shares are outstanding. So who gets the vote? And that can literally decide who gets to run a company, and that's a practical problem. And what they don't get, and it's like, you think about it in any one of your stocks. Imagine if there was forced buy-in for 30% of your float, Wayne. Your stock would be $2. Okay,
that's right.
So,
that's right, yeah.
So, and the challenge is, who's got the risk in that? It's the broker who's got the risk. Okay, and who's ultimately who's going to be looking after the broker? It's the citizens, because that's what happens when the financial system goes down. Is people have to get bailed out. So the scary part, in my mind, is that the regulators are just have let this very dangerous practice go on, and unwinding it is going to be sort of scary in my mind, because it's like, they need to, these we know most of the shorting is from hedge funds offshore. That's a statistical thing. You can find that out. And they put up enough capital, when you do this, when you short a stock, you have to put up 100% of the stock and 100% of the capital. But with the stock starts to move against you, if you actually had to physically deliver, that could get eaten up in a heartbeat. You look at the best, what people, the audience would recognize right now. Look at Tesla. Tesla basically was a short squeeze that drove that stock through the roof. So you can see what can happen to valuation. And imagine if your broker has to buy in and cover that loss. A lot of these guys would be wiped out. So that's the scary part for me as a capitalist. And I see that and I say, Jesus, what are we going to do? Because that's terrifying. I don't know. What do you think, Wayne?
Well, I think that's true. And the other thing that is really terrifying is the 14 other exchanges that you can trade on, and you can have black pools. So you can wake up at 6:15 and you can do a trade that's 10% or 10% below or above the market, and there's no transparency about it. There's no reporting issue. It doesn't show up on your screen. Nobody knows it. And so people don't realize. And the other one that I would get rid of is this thing called anonymous. I mean, who is anonymous anyhow? And so it's a way of people hiding out of where they're selling. We should have total transparency and be able to, and that's the fair thing for the shareholder.
Yeah,
We had
I
agree. And that's the one I think we should get rid of all that and just go back to the basics, run the TSX, and here was our we're trading. Here's the banks we're trading with, and
no, one of the reasons why TSXV and Brady Fletcher is a supporter of Save Canadian Mining, and I think they weren't initially not to Save Canadian Mining, but initially they obviously were. They were part of the group that brought in algorithmic trading and all the exchanges, but now they realize that ultimately it does everyone a disservice. You've got our stocks are sold in 14 different exchanges, and it basically, as we've seen from our data, it's been part of the contributing factor of having such a destruction in shareholder value. And it really, and from my perspective, we trade on the TSXV. That's where we list it. That's who my regulator is. I just want to trade there. I don't want to trade anywhere else. And then it'd be damn simple for the tick test to be reinstated. And I just, it's like, let's get back to common sense here. I mean, this financial engineering for the hedge funds, how does that win votes? Because at the end of the day, that's we got to sort of face the facts. Politicians,
but it's big business. I think my research, the business or the dollars involved in naked shorting around the world is trillions. It's trillions of dollars.
Trillions. It is trillions.
So that's the issue.
Yeah,
you're fighting, a money movement. Right.
Yeah, no doubt about it. I guess all we can do is to try and bring that it's all about transparency, and we need it's not as transparent as it should be. It's transparent on our end.
Let me jump in there.
I agree. Go ahead.
I agree with that, and that's what the exchanges should be doing. That's their job, is to provide liquidity and transparency.
Yeah, that's all.
You can't do that. Like, what's going on?
Yeah.
Well, when you list a company, they put you through the drill is huge, but then they let you trade, and they can do anything you want. And these algorithm traders build their trading platform very close to the exchange, so they can get that nanosecond of an edge on you. So there's companies, we won't talk about them individually. You have a person put a buy order into that company, and the same ticket goes on a sell at the same time.
Mm-hmm.
Yeah. So it's already sold to you before it's even hit the exchange.
Yeah.
And it's just not transparent. And that, I don't think we live in a world that's not transparent. And that would be good if we could push it. And I think that's a good piece for the government.
Yeah.
Be that transparent government.
Yeah. So because we're sort of getting towards the end here, I want to get to a couple more things. I guess from on a positive note, the part of the recommendations in the first go round was they did come out and say that in terms of the predatory short selling, they were going to say to people that if you are selling stock, you can't buy the stock in the offering, can't cover. And I think that'll be it won't, it's not the be all end all, but that'll be a helpful step. It shows they're listening. We got to get more, because we're both, from a commodity side of things, I don't think we could be positioned better than we could have the mining boom of all time, and everyone, the stocks could really do well if we could sort of fix up the get these impediments out of our way. Then we could really rock and roll. Speaking of rock and rolling, and what we're investing in these days, one of the promises I made to the audience was that I'd say I was going to ask you all not to give us your own stock, because we do know you're long and therefore recommend we buy. We get that. But let's talk about some other stocks you like. And, Alistair, why don't you start? You tell me about something you like in your portfolio and why.
Well, I mean, just in the broad sense, I mean, we like gold and copper. Who doesn't, right? I mean, the reason I like it is because, of course, it has a liquid market. It's transparent, all those things that we like to see in terms of liquidity. So that that filters down to to yourself as an issuer in terms of having exposure to those metals. But what I'm encouraged by is what we've seen, in the last, I would say, few months, that the institutions are coming back into metals in general. In particular, big companies, if I can name the names, like Barrick basically has done well to attract institutional investors. Mm-hmm. And if you've got gold prices here at sort of 1,900 or 2,000, and a lot of people are talking 25, 3,000, whatever. And if you're producing gold at $2,000 an ounce, you're going to make a lot of money. Your cash flow is going to be enormous. And so, I think that has yet to really come in to roost, and for those guys who are at that level, who are producing gold, to really benefit. And the fact that we're seeing, those guys back in, even Berkshire Hathaway, taking I'll call it a punt, a $500 million punt, whatever it is, that it's encouraging that, we will see that lift in the market. And back to, Martin Murenbeld's analysis, and, I've known Martin for many years, and a lot of faith in his work, that that big gap that we will all as participants in the market here, and small companies or big companies, that gap will narrow. And so that's, I think, where the real value is here is now come into mining, because there's good value here. There's just a natural gap to close, whether or not you see the metal prices rally. But I think this is it's all good for us. Okay,
sounds good. Now, before I let you off the hook, though, you got to give me a pick. You're like a politician, Alistair. You're on the hook now.
in terms of an actual
a mining stock you like.
I've never said this, because I've really been kind of anti, because the majors have done so poorly in many years. I'm saying Barrick.
Okay, Barrick's a great pick. All right, Alex.
Because that cash flow side.
Yeah, can't go wrong with that cash flow.
I think you're on the right track there. For me, I'm all in Rio, so I'm invested in any other junior stocks, but the ones that I do like out of the other group would be developers / produce or upcoming producers. So Orza, Faso, if you like, the African risk. Pure Gold, obviously, just about to start producing gold in Canada. Ourselves, we'll be producing gold in 2022. I think that's where the real talk is, because and you can see by this business that if you can get yourself into production and do it in a meaningful way from a quantity of metal produced at relatively low costs in this environment, then there's nothing better than generating positive free cash flow, right? Okay. So that's what I would target if I was an investor. Drilling, great stuff, but no, I'm going to near-term.
Okay, cool.
I couldn't agree more. That's our focus.
Well, that's why there's chocolate and vanilla, guys. So we're going to go over to Mr. Vanilla. Wayne?
Okay. Well, I'm a little bit more of a risk taker than you two. Maybe, I don't know. I like I like copper a lot. I think this EV market is going to drive the copper market crazy, because the amount of copper it takes to build all those charging stations. So we're going to have a real run. And I like a little company called OCO, and it's on the TSX, well financed, have a huge asset in Mexico, and I think they'll be bought out sooner than we think. So that's my pick.
Cool, that's good. I'm with you. I'm on the exploration side of things. I know that a bit better than. I mean, I'm also I'm into the producers. I'm well invested in them, and I got a big position in Rio. I'm thinking two things. On lithium, I like a little company called Critical Elements. They're in Quebec. They got a final feasibility study. They're just waiting for the permit. Stock's around 30 cents. It's a ridiculous price. I think that's got explosive upside. I like lithium a lot, and they're pretty much my top pick in that space. And then another explorer in Quebec. It's Quebec Precious Metals. But 1.5 million ounces of gold, only like a $20 million market cap. Got a lot of open possibilities. Got cash. So it's a speculative, what I consider a low risk mining explorer. I think those guys they put the money in the ground. They're sharp guys. So there's my two. So hopefully that'll help folks out there. We're just about to wrap up. I don't think there's any more questions coming from the audience. As we wrap up, one of the things I'd like to ask the audience to do, if they could, if you're a mining company, we need lots of help. The more people we have join the Save Canadian Mining team to push this over the edge and get the governments to make the changes we need that could really close that gap and allow our stock prices to get back to the normal, we're trading around the commodity index, which would be huge for us all. That would be a wonderful thing for our companies, be a wonderful thing for our shareholders and for our communities. So if you're a mining company, please look to join Save Canadian Mining and make a contribution. The people on the call here, we've all put in sort of 1,000, 5,000, 15,000. It's not a lot, and we're not, because nobody's getting paid to do this. We're all just trying to do this, out of just self-interest, but also community interest. So that would be awesome. If you're an individual, what you could do for us is come and join the site, savecanadianmining.com. There's an opportunity you can donate. There's a donate button there. Again, we're not looking for huge money from individuals, but also spread the word. It's a social media world. If you could post it on LinkedIn, if you could put it on Twitter, this is it's in your enlightened self-interest, I would say, if you're an investor in this space, to get these rules changed. If these rules change, this market will rock. Even like it's going to do well anyway. But if we get these changes, it'll do phenomenal. So it's like, and it should. It's like, let's help the little people win. Let's help individual investors win. Let's help pension fund investors win. Let's help institutional investors win. Let's help companies grow. Anyway, gentlemen, I really want to thank you all for coming and sharing your thoughts and your ideas and what's exciting and happening in Rio 2 and Canadian Palladium and Alpine Metals. And really looking forward to following those stocks the rest of the year, and wishing you all the very best of luck. And thanks to the audience for listening and supporting the cause. And we'll look forward to seeing you in 2 weeks. And 2 weeks, we're going to have another roundtable. It'll be on the precious metals, and so gold and silver. We'll have some, I think, some big guests. That'll be exciting for you to turn up and listen to, and we'll get that lineup to you shortly. And look forward to catching you in a couple of weeks. In the interim, stay safe and be happy, and go Raptors, because it's a big game Saturday tonight, and I'm a Raptor fan. So
Good.
All right, everyone, have a great day. And we'll
Terry, thanks.
Thank you.
Cheers, guys.
Bye. Bye.